Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next weeks, and hopefully lots of great ideas and opportunities for you throughout the show. Well, make it 3 in a row for the stock market, that is, where positive vaccine news comes out on Monday and lifts the markets, as AstraZeneca said their vaccine was 70% effective. Well, when you think about the Pfizer vaccine, why take one that's 70% effective when you can take one that's 95% effective? And then AstraZeneca later in the week had some issues, as they said that there were some mistakes made on their vaccine, and they're going to probably have to run trials again, as the vaccine had some better results when only half a dose was given, and they didn't even get that right as far as who's getting what. So I think that they need to do that over again, and so do they. So we're going to get more results from them, and that might cause a delay of AstraZeneca's approval, or emergency approval for bringing that vaccine out. Hopefully we get that really soon. Tuesday was really the big day on the upside, as a path was cleared for the Biden transition. And news that really moved the market up, and stocks got bought very heavily, is that Yellen was chosen as Biden's Treasury Secretary. She would not have been my choice, but since she seems to own her own printing press, investors were really pleased, and they seem confident that there will be more stimulus and fiscal stimulus and otherwise, as she and Powell team up and turn up their new MMT engines to print at rates before never seen. I don't like Janet Yellen. I've made no secret about that. She missed the opportunity to end the great experiment. Even John Maynard Keynes would be rolling in his grave right now because he believed that when the economy was strong, you're actually supposed to pull back on government spending and run a surplus and pay back some of that debt. But no, this particular modern-day Fed wants nothing to do with any of that. So Yellen completely missed that opportunity, and I think that was just a major mistake. And of course, Bernanke and Yellen, all part of this extremely activist Fed. And Powell, which seemed like he would be a little bit different, well, not so, because he ran into COVID-19, and he just simply joined in this MMT movement, which I think is going to be just horrible. Markets, I think, will prove them wrong, as a perpetual motion machine fantasy at some point goes away and this big debt bomb explodes right in their face. And watch for the bond market to actually tell you when that's happening, and I think a bond bear market has begun. The rest of the week was pretty calm, as investors rested for this holiday and focused on online Black Friday shopping. And didn't even pay much attention to the Wednesday FOMC announcement that came out that just said that in their minutes they're just going to be jawboning about jawboning. So not much to offer there, and just talking about how they were going to talk to the markets, which is just more of the ridiculousness that comes out of that part of the government. Yeah, it is part of the government, even though they say they're independent. And not much really, of course, is going on unless you were watching Bitcoin or happen to be holding Bitcoin, as that moved down $2,400 in a couple of big down waves in about 6 hours overnight the other day. That's what happens when valuations are built on air, and there's a little lesson there for the stock market also. I showed in Future Speak last week that there was getting into a little period of risk here for the Bitcoin market, and talked about it moving down from these 1900s into 1700s or lower. And that's actually what we got really quickly. I'll show you that Bitcoin analysis in just a few minutes. I'm also going to show you gold, and I'm going to bring you the indexes and the VIX as we take a peek at the 1 to 3 month outlook for these particular symbols. Stock market, well, for the week, holiday season is not necessarily a period where you have low volatility. We're getting that right now, but that's likely to change. In the last 6 years, there were 3 up and 3 down years in December, and there were some pretty big moves then. You'll see when I show you the VIX chart that a pop in implied volatilities is expected very soon. Still, overall conditions are not really set up for a big downside move right now, and we talked in the last several weeks about the expected range that we think the market will be in. I'll show that to you also in just a few minutes. And for December, we think that the month may still get even a small gain for the month, as we think there will be a drop and then a recovery back towards the end of the month. So you'll see that chart. Plus, we'll give you a look at what could be a very, very dangerous winter ahead for the stock market. So stay tuned, because I'm going to bring you that. In this holiday shortened week, stocks gained between 2.5% and 3.5%, depending on the index you're looking at. The Russell is still the strongest as money is moving in to these stocks that basically don't make a lot of money. And the Russell valuations are just mind-boggling. They're so high. Bond market was a mixed week for the bonds, as the 30 years gained 0.75 of a point and the 10 years lose 0.5 point. So the 10-year yields pick up a couple basis points, and that's a bit of a curve flattening that's going on. Probably the Fed loves that. Gold plunged. So here we are, it's an odd time right now when you think about it. The stock market is moving up based on the COVID-19 being gone, and all of the prospect for Yellen and Powell bringing a lot of stimulus still, and at the same time the gold market is plunging. So what makes it even more unusual is that the dollar was down 0.6% for the week. A silver market collapsed. So if we're getting all of this stimulus, how could silver be down about $1.50 on the week? And that's a threat of a breakdown also. This was a very bad week for the gold market and for our analysis, which we have seriously downgraded for these markets. And maybe that's just all part of the euphoria that the markets are in right now, thinking that you don't really need to have anything that is safe. So they're selling gold. The gold's dragging down the silver market. Implied volatilities have the VIX down under 21, which is the lowest we've seen in quite a number of months. And we'll look at that chart, and I think you're going to find what I have to bring you pretty fascinating. At the same time, the oil market moves up $3. This is 4 weeks in a row of very big moves. Oil market in 4 weeks goes from $35 to $46. That's like a 30% gain in just 4 weeks, and some pretty spectacular moves that we see in there. There are some of the things that look inflationary that have moved up very sharply, and that is looking at the foods, the grains moving up pretty sharply, but here's gold moving down. And it's all of this swapping that's going on right now in this great big rotation that we're seeing in the market, as the stocks that were beaten up very, very badly are moving up, and the stocks that moved up because of the stay-at-home, work-at-home environment have moved down. So that's the big switch that's going on right now in this great rotation. And the stock market able to edge higher to slightly new highs or testing highs, depending on which index you're looking at. And we have a lot to show you about that coming up in a few minutes. So what I want to show you right now is some very, very important things coming up. So make sure that you don't scroll forward too fast, because you're going to love what I'm going to show you now. Right, in the meantime, go to askSlim.com, explore the site. Make sure if you're new to that, become a free member if you've never been a member there. We have so much coming up, and we're going to have some beta testing of some things that you're going to be able to see that, well, nothing short of incredible. If you're watching this on YouTube, please subscribe to our channel. Make sure you click that notification bell so it lets you know when we post things. We post almost every day. And make sure that you like this video. Give it a thumbs up. You can follow us on Twitter at askSlim.com. And Arvi, our cycle analyst expert, is putting up some great videos on analysis on there. And if you want to learn cycle analysis, well, there's nowhere else to go but Ask Slim. Write to Matt at askSlim.com for membership info and questions on our huge offerings of education, analysis, and now our specials that we have for the holiday season to be able to give gifts. So now we're announcing the annual Ask Slim holiday special. Give the gift of Ask Slim. This is just an amazing thing because if you know somebody that's interested in the market or yourself, you're going to love this. We have special 3-month rates on our memberships now. And what's special about this is that it's non-recurring. So in other words, you buy this and then there's no automatic renewal. If you like it, you can renew, of course. And if not, you have 3 months to learn tremendous things out of this site. Give the gift to someone you know who really loves trading and investing. It might be a young person. We have 500 plus videos of that I have done and Arvi now doing, where we're teaching about analysis and cycle analysis, and 8 categories of videos in there that are just amazing things for training purposes. Give yourself that gift. It's great for first-time members at askSlim.com. Again, because it's not going to renew. You're not making a big long-term commitment unless you want to. Or if you're an AskSlim member and you want to upgrade, you can go to a higher level for 3 months using this special. And a bonus gift for you. So in other words, you give the gift, we're going to give you back a gift. And that is an Amazon gift card. If you want to get more info, become a free member, and we'll be sending out a lot of stuff about it, and we'll be putting it out on Twitter and other social media, or ask your questions to Matt at askSlim.com. Here's a little peek at what you can get in here, as we have 3 different levels in these specials that we're offering for gift giving. For level 2, the special holiday offer, 35% off our 3 months for only $86.06. This gives you everything in level 2, everything in level 1. That's just some great new things that we put out there. I can't even explain it all. There is so much in there. You'll have to go to the site or ask Matt what that includes. It's only $28.67 a month in this special for 3 months. And then we're going to send you back an Amazon gift card for $20 that you could spend on yourself or on any other gifts, just as an additional special that we're doing now. For level 3 on this special offer, 1/3 off of our 3 month for only $200. That's only $66.75 a month. Everything in level 2 and 1, plus you're going to get our Slimulator rankings app. You're going to get our trade ideas that Arvi puts out every day, spectacular. Only $200 for 3 months of this. Plus, we're going to send you back a $50 gift card that you could spend on yourself or other gifts you're buying for anybody else. And this includes our new chart stream service that's launching next week. You won't believe what this is, but we're sharing a ton of our analysis on live charts on our new chart stream service, so it's included in that. That'll be for level 3 members. Level 4 members get all of that, plus our charts on their Thinkorswim platform. So you need to be a TOS member, and we can send you a special link to open up a TOS account. It's our preferred broker, and you will get credit for that. $303 for this with all of our live stuff. Plus, you can write me emails, ask me for special analysis. Same thing for Arvi. You can send us questions on trading issues or other things where we have an open line with you that you can send us a couple times a week. Plus, we're going to give you $100 back that you could spend on other gifts and anything else that you want to, just a special we want to send back to you. So this is, there's never been an offer that we've done like this before on any of these. These are just huge offerings. We want so many people to be able to get exposure to what we do and everything that we have new. And this level 4 includes all of these custom charts, proprietary studies, all of the indicators, and you'll be able to also put up our live chart streams too. So unbelievable things that we're giving. Just a tremendous offer that we have for you. Level 2, 3, and 4. Give that gift of askSlim, and the people that you give it to will be very appreciative. And even if you give it to yourself, you will do some amazing learning. Questions, write Matt at askSlim.com. Okay, so now we're going to get into our charts for the week. In the beginning of the show, I talked about the Bitcoin move as Bitcoin simply evaporated. Well, it gave up $2,400 while they were sleeping, and that was about 11% drop that happened very quickly as it got up to kind of double top area for Bitcoin. I'm not a fan of Bitcoin, as I've made pretty clear, but my analysis is always agnostic. We're going to show you a little different thing today because the focus is on 1 to 3 months in the Market Week show now, but I'm going to show you 2-hour charts today just so you can get an idea of some of our proprietary indicators and how short-term traders can use some of this. So we're going to take a peek here as now we look at the Bitcoin market. So this is Bitcoin on a weekly cycle chart. You want to learn about cycles and this type of analysis? We'll go to askSlim.com and click on the Cycle Analysis Workshop, and there's a free video on there for you to see and all kinds of things. We have a cycle workshop that is 20 video modules that I created over 2 years' work. I've studied this now for 45 years, and there are a few experts in the world like I am and like Arvi is in doing this type of analysis. So you want to learn from us, it's great. This is the Bitcoin chart looking at the weekly analysis. You'll notice yellow ovals in there. So what the yellow ovals are showing you are periods where what we call the dominant cycle, that's this cycle right over here, that's when it comes down and you get some of the biggest breaks that you can see in there. Sometimes you only get a modest little break, and that shows you how bullish things are, and it explodes back to the upside. Did something similar right over here where it had a modest decline also. What's interesting in here is that this has a lot of times the cycle patterns you see are lined up perfectly. You'll notice these are out of phase. That's what we call them. And you can look at the principle of summation to understand that in our workshop. So what we have here, as you can see, this blue minor cycle, and those showed you how the ideal forms on the bottom and how the actual forms on the price chart. And what happens is that when the minor cycle is pushing down but the bigger cycle is pushing up, you get this action where essentially you have two forces that are going on, and those two forces send the market into a pattern where the corrective forces are pushing down, as you can see right over here, this bigger dominant force pushing up, as you can see right in here, and that creates a triangle, just like it did right in here also. And then after that's over with, the forces move to the upside, and you see this is our momentum indicator, and that was moving up very, very sharply. All of that perfect. It gets up here back close to that 2000 area and then gives you this dark cloud cover. What that is a warning in the candlesticks that that peak is in. Now you see the minor cycle coming down right over here, and we have that projected down to it getting somewhat under about 16,000. That takes you out into around mid-December. Then another rally. And then we get into that yellow zone over here where the price could fall again. So we think that now we're establishing a range. This is about 19.6. This over here is about just under 15,000, 14,750 on that support zone. And that's the range that we think we're going to see Bitcoin move in. The real risk comes out, and where we think there's the potential for the crypto crash is out in spring right over here, where these cycles all turn to the downside again. So we think we're going to see a big range in here of about $5,000 over the next 3 or 4 months, and then it turned down again. This whole thing about 21 million, the fact that it's a limited number and 21 million Bitcoin can only be created, and most of that is already done. In the next 100 years, we'll create the rest of them. And so it's very difficult for miners right now. But don't worry, there's plenty of cryptocurrencies. There's over 5,000 of them right now, and and they're growing. And it's an unlimited supply. Facebook is going to come out with theirs just pretty soon. And so no shortage of cryptocurrencies out there for sure. And this whole fantasy of 50,000 or 100,000 is nothing but pie in the sky. And in the meantime, I will be 100% agnostic. When it's bullish, I'll tell you that, just as we did right over here. You see in October, we upgraded it, and it was a perfect timing on that upgrade as it exploded to the upside. Now we're looking for a range, $5,000 range, and then out into the spring, some big downside risk. This is not going to be popular amongst the Bitcoin lovers because they see those real high numbers. I think it's purely fantasy. And no matter what happens with the Fed, well, I mean, if we do get printing it's possible that they do, well, that'll be part of what holds this up for a while. Of course, that would help gold also, but the true forces out there are really deflationary. And I know people will say, how is that possible? I'm going to talk more about that going forward in coming weeks, as I read a fantastic book, which is called The Price of Tomorrow. I'll talk more about that, written by Jeff Booth, The Price of Tomorrow. Fantastic book that tells you why deflation is a force that just can't be stopped. So there's Bitcoin and a lot of things out there that are going up in the crypto world that is not likely to be able to continue as we move into next year, where I think there's going to be a lot of risk. I'll do some bigger picture analysis in that as we move forward. Right now, looking for, over these next several months, about a $5,000 range. And right now, we're dead center in the middle of that range. And you can see this choppy condition that really is setting up right in here as these cycles fight each other. And I think we're going to see a lot of that movement back and forth. That is a look at Bitcoin. So now we're going to move over. And here is the analysis on gold for 1 to 3 months. So we were in this Bitcoin analysis. I'm going to switch this over to the gold market. And this, yes, is the busiest chart maybe that you will ever see anybody put up. It has just a fantastic amount of information on it, where those green zones are rising phases in these cycles. And here, this big cycle over here is a very, very important one that you see right there. There's a mid-cycle low right over here that you see lined up that actually is silver that has that. So what do I have on here? I have silver, I have GDX, I have the minor cycles in gold, and the dominant cycles in gold. When you get nested areas, and these yellow areas right over here where you see nesting, once you break out of those, you have big upside moves. And we did a great job predicting these upside moves in here. And the last one we thought would get it to 2,000. It got over it with a $435 upward impulse. So now let's look at where we are right now. And this is really key. What we had happened was that all of this correction going on that you see right down over here, and this major one here, all of that came at the right time. And then you were supposed to get a bottoming and a rally that we saw in here, and we were projecting up here to make at least a double top or to get much higher. But once it breaks underneath this low, and on the 9th of November, we warned on that, saying that we were worried about a breakdown. And for the last 3 weeks or so, we've been very cautious in here, saying that there were issues. And the gold market did break down this week. That now moves all of our projections down. This low right over here points to a low in February. There's this other blue one over here that points to a low in May, and there's another one goes out to September, October. All of this is suggestive of the fact that gold is done. And the big bull move that we loved and we saw really looks to us like it is over. And this would be, let me just get a little closer look in here. Right now, looking for the silver, gold, the gold miners, all of them, and gold miners have had some breakdowns also, all looking like they're going to move down into this nested area, February through March. And it means that if rallies come in here in this red zone, and see there's no other red zones in here because of the breakdown, that would then give you an area that I think gold needs to be sold, and the gold miners need to be sold in rallies where it comes back in here. It came down to this support area that you can see in the mid 1700s. We're projecting it to get down now to under 1700 here in late January through sometime in March. As all of these cycles will be pushing to the downside. The silver cycle has not broken down yet, but it is very close as silver is really plunging today, down 3.2%, 75 cents, pretty big downside in there, and showing some risk. The silver is a stronger pattern, though, than gold is right now, which has, to us, a very clear breakdown. Rallies need to be sold, and again, this might be all about the deflationary forces out there taking hold again. And if that's the case, well, what we see in Bitcoin is it collapsed overnight. What we see here in the gold market on breakdowns, all of those things could be really taking hold, and investors are thinking about that right now. Yeah, they're moving into stocks that look cheap to them, that haven't had big upside moves, as they're moving money out of other things that did have big upside moves, but this is just a lot of swapping of money that's going on with some deterioration and some things that would be affected by a deflationary force, and you see that right in here. So the gold market in bad shape, really, when we look at this. And we're going to, for our members, on Future Speak, we do on Wednesdays, we give all of the daily information also. So make sure that you watch that on Wednesday for levels 2, 3, and 4 in our members, where we look at 24 different futures contracts, a really deep look at that, looking at different pictures of the different time frames. That's the word I'm looking for. Now I want to show you something as we look at the gold market. So here is a 2-hour chart of gold. And this is the kind of things you're going to be getting in our chart streams right now. And what we've added in here, a lot of people have liked the projection oscillator and how that works with the slim ribbon and other indicators we use. Well, what we've done, and is an amazing job, and RV gets credit for this, is that we've created a new indicator. And that indicator is the slim ribbon PO. And what that does is it takes all of the information off of the slim ribbon that you see right here for momentum purposes, and it puts it into this with as if you're looking at a projection oscillator with all of the coding from the slim ribbon in it. Fantastic, just unbelievable. So what it shows you is that when it's green, we're in a period where the momentum is up, and you can see right in here. That's a period where you want to be biasing your trading to the long side. So we're looking at a 2-hour chart right over here. So that would be probably the longest time frame that anybody would be using when they're a day trader, an intraday trader. So that's what we're showing you right in here. When it turns negative and the momentum is negative, and you can see this bear flag that built in here, it went negative right here, and then it went neutral. And what happens is that once it goes red again, it tells you that the momentum is negative. And what we have added in here is our reversal scout. So that's this line right in here, and that is a complement to the slim ribbon and the projection oscillator, slim ribbon PO. And when they're all aligned together and you get these signals of confirmation right in here, as these arrows show you, there is a lot of downside risk, and you see how that came in here. I don't know how anybody could trade without really having this handle on what the momentum conditions are and when the biggest impulses are likely to come. You can see in here, it turns green. You have signals in here on the long side, and the big upside impulse comes. Here it turns red. All of this stuff aligns on the downside. Let me give you a little closer look at this. And you can see as it brought this big selling. When you have this turning red, it's a period where your bias is to the short side. When you get the arrows, these are confirmations, or they tell you add to a short position or even initiate. And when the reversal scout is aligned with all of this, well, it just tells you how the momentum is quite negative. This is a great look at just these last couple of weeks in gold right over here and how it gave you great signals. So right now we're in this negative condition still. As you can see, we're not going to really be on the long side when we see that at all, even though people certainly may be tempted by that. So that is a look at the gold market. As you look at here, the negative condition that you look at for coming months out there, and here for very short-term traders, all of that information with our reversal scout, slim ribbon PO, just giving you great information. So that is a look at the gold market, which we see as in trouble. Now we're going to switch over and we'll look at, this is the stock market, 1 to 3 month view. And we're going to look at the 3 different indexes and the VIX, and then I'll put up the SPY 2-hour chart for you to take a look at that also, and I think that you'll find that very interesting. So now we're going to leave the gold market and we're going to go to SPX right here. And again, you can see this is a pretty long-term chart. We're looking at a couple of years right over here of weekly information. And again, whenever you see these yellow ovals is when we get into a period of risk. That's when these cycles are coming to the downside. I've added something in here, this purple dash that you can see, and that is the NDX. So there's a little different alignments in here, and these point to declines out over here into the winter time after some potential chopping around. What are we looking for right now? Well, the market is still trying to move up, and the holiday week gets some gains, as you can see right over here. We're looking for the next couple of weeks to get some downside, and we could see the S&P 500 getting down to about the 3475 area where that support is. That would be about a 160-point drop. It's not very much percentage-wise, only about 4% when you look at this. So we see a drop in here into December, but then we see another rally out over here into January. That's these minor cycles that you see how they line up right over here. See where they all nested over here and all moving up? Well, you got that big upside move. When you got the minor one moving down here, but momentum was moving up sharply, you get only minor downside moves. So where are we right now? Coming up to a period of a minor downside move right here, and that's what we expect. We'll just call it 3 to 5% pullback in here, and then moving up. But then we get into this period here, into late January through March, where we end up having a very big risk again, where I only have this projected down modestly in here, maybe a 10% decline, but this could easily be much bigger declines down to these support levels down over here. So we see these patterns in here suggesting this period of risk in here in this period of late January through early March. That's where the next big risks are. So for the next 1 to 3 months, we see the range. There's this support up here is at around 3645. There's some fib extensions up here just over 3700. So that would be the outside of what we see us being able to get in here. So you can see the range in here maybe is around 3700 at best, 3720. Down here to under 3,500 over these coming months. Pretty narrow range that we're looking for in just the next, December, January. Maybe it's about 10 weeks that we're looking at here, 10, 11 weeks. And then you get into that period of a much, much bigger risk. And like I said, the winter time really looks like there's some big risk in there. If I switch over to the NASDAQ, which has been slightly underperforming and then this week got a little bit better, it's the same thing. We're looking for these declines to come down here into February, early March. And the Russell, which has been clearly the strongest indicator of all, strongest index of all, coming up here way up to this 161 fib extension. Another one right up here. So the targets was up here at this level, 1876, potentially up to 19.25, and we're still looking for that. But again, bigger declines expected out here in February and March. So all of this period in here where we're looking for this kind of churning going on for the next, we'll call it 10, 11 weeks, in our opinion, is a time frame when allocation should be sharply lowered for the stock market. And of course, we've had a massive 11-year bull market in here, and we see these air pockets that are hitting some markets and the deflationary forces that are looking like they're out there. And I think that you could see some air pockets on the downside in the stock market. So that's a look at the 1 to 3 month view. I promised you that I would look at a short-term view, and we're going to look at the intraday. I want to show you what some of our new proprietary charts look like and indicators that you're going to see on our new chart streams. And we're going to be showing that to you starting next week, where our great charts that are live with all of our analysis on them for multiple time frames, those are going to be coming to you and available broadcast on our channels. Amazing great work that our team has done in creating that. Let's move over here. I'm going to put up the SPY so you can get an idea of where we are now. I put a little more analysis on here. So this is an example of our 2-hour chart, and there'll be similar charts like this on chart streams. This is the SPY momentum with our reversal scout. That's this right in here that gives you a directional sense and momentum. The slim ribbon, which is a momentum indicator right over here, and our new slim ribbon PO, which is down right over here, which takes the projection oscillator and it puts in all of the coding that's in the slim ribbon and gives you amazing signals. You can see in here, while it was red on this 2-hour chart that we're looking at, that the momentum was down. The reversal scout moving down right over here got neutral for a little blip. And then the PO, or a slim ribbon PO, giving you all of these signals that you have to be initiating short side or staying on the short side with these confirmations. Does it all through here. All this red is negative that you see right there. It gives you this sell signal here and then aborts it for you. You see the color changes to blue in that up arrow. It tells you no more when you do that, and all of a sudden it changes to green. These are periods where the upside is going to be on your 2-hour charts. You can see these formations that form in here as it corrects and comes down right over here and gives you these signals to get back in. Fantastic. These formations that you see are flags and pennants, triangles. All of them are telling you when you get these signals that bullish things are likely to happen, and you see that happening right in here. Here you got neutral, as you can see that right over there, and then you turn positive again right over here. So we're right now in what we call buy pending mode, where once this arrow forms right in here, it will be a confirmation that things are still strong. I don't know how anything could be clearer. And if you're a day trader, scalper, and you want to look at at some little longer term to give you a directional idea, well, this 2-hour chart is what does it for you, and we'll be showing that to you in our chart streams. This is a little hint. Arvi and Matt are together preparing that release for you for the next week. You have to watch that. And you will, even if you give the gift of AskSlim to somebody, they're going to get an opportunity to take a peek at that also. There's the S&P 500 for the 1 to 3 month picture where we see this choppiness coming. And here is this 2-hour fantastic chart that I think will really serve you to look at for your short-term trading. We have great teaching write-ups on all of this that Matt and Arvi have created, and you're not going to believe how much you learn about getting on the right side of a trade and maximizing that trade. That is a look at the stock market 1 to 3 month view and a special peek at our 2-hour momentum charts with our proprietary analysis and indicators on there. Make sure that you do give that gift of AskSlim. If you didn't see the whole review on that in the full show and you're just watching a clip here, please go back and watch that. Great. It's the best offers we've ever given for this holiday gift special for you, so please do go there. And if you want to learn more about AskSlim, go to the website, explore it, become a free member, and do go to, if you're watching this on YouTube, give us thumbs up, like this video, and click the bell so you get notified of all of our videos. And please do watch a lot of those videos that have the playlist and past shows and stuff on there. Really help you. Twitter, follow us at askSlim, and write to Matt at askSlim.com for membership info and our huge offerings of education and analysis, and of course our new gift offerings that we have. That's it. I want you to be so unbelievably careful because it is so crazy out there. And we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been